Welcome to the Traveling Thief, where future high flyers get inspired to travel the world and secure their success.
Bitcoin fans know that last January 2021, its price was around 50 to 60,000 US dollars. Prices came down to the 35,000 US dollar range from mid-January to February. It bounced up to 47,000 by March, only to crash again to 30,000 US dollar prices sometime in May. Fate may well be pranking us, as Bitcoin plays around 16,000 US dollars at the time of making this episode. So with all that roller coaster ride that Bitcoin has been through in 2 years, why are we still saying that Bitcoin might be the next gold in this oil crisis? Stick around and listen, because here are 8 reasons why we think Bitcoin can be a lifeboat investment in this looming recession, energy, and the oil crisis. But before we start, if you find value in what we do or like our content, please hit those follow and subscribe buttons, so you will be updated whenever we share great content every time. Number 1. Bitcoin is limited. Shortages happen when a resource becomes scarce. Almost similar to oil and gold. Nasdaq published this October 2022 that Bitcoin has a maximum supply of 21 million. Research estimates that between 3 to 4 million Bitcoins are forever lost. So how can Bitcoins be lost forever? An owner can only access their crypto wallet using a seed phrase or private key. Losing it and you cannot retrieve, use, buy, sell or trade your Bitcoin and other cryptocurrencies. This happens to many people most of the time. While some owners have died and have not used, transferred, or traded their digital assets. Many believe that the creator of Bitcoin itself, Satoshi Nakamoto, holds as much as 1 million Bitcoin. Satoshi Nakamoto has not published any communication since 2010, which led to people presuming Satoshi Nakamoto died. Number 2. Bitcoin, gold, and oil are all mined. Nasdaq says there are 19.1 million Bitcoins mined as of October 2022. It uses a proof-of-work consensus mechanism, which means using a lot of computer and electrical energy to solve complex mathematical problems. Mining secures the network, validates transactions, and prevents people from double spending. Double spending is similar to counterfeiting money or the inability to tell real currency apart from fake. Number 3. Bitcoin is inflation-proof. Inflation is one of the reasons oil prices and the rest of the basic commodities are skyrocketing. And with the idea that the fiat money would eventually lose its value over time due to central banks issuing money. Bitcoin does not move with inflation, but like any other investment, it has its bulls and bears. Number 4. The value of Bitcoin, oil, and gold goes up with time. Even after its recent crashes, Bitcoin doubled its value last 2021. Experts say it will likely surpass 100,000 US dollars though on a longer timeline than originally expected. Looking further ahead, the range of prediction is wide, with some saying it could still be worth millions. Number 5. Gold and Bitcoin both have diversified portfolios. A diversified portfolio means investing your money in different assets and securities to minimize the overall risk of investments. Diversifying your crypto portfolio involves spreading your money across multiple coins, tokens, or projects. So you can put it in Bitcoin, Ethereum, Tether, USD Coin, Binance Coin, XRP, Dogecoin, Cardano, Polygon, and other digital coins. Number 6. Bitcoin can be divided into smaller values. Divisibility is one of the properties of money, commodity, fiat, or cryptocurrency that makes something of use or value into exchangeable money. Bitcoin divisibility is crucial for it to be adopted and have practical usage as an everyday currency alternative. Number 7. Bitcoin is decentralized, encrypted, and secure. Daniel Rodriguez, Chief Operating Officer at Hill Wealth Strategies, said Bitcoin technology is relatively safe, but it isn't anonymous and relies on passwords. While Bitcoin disguises your personal information, the address of your crypto wallet is publicly available. By the way, the crypto wallet stores your private keys, keeping cryptocurrency safe and accessible. It allows you to send, receive and spend digital coins. So how is Bitcoin maintained and secure? First, through public key cryptography. Bitcoin uses a private and a public key to ensure the authenticity and integrity of transactions. Bitcoin's digital signatures are signed using an elliptical curve digital signature algorithm. Second, blockchain transactions are irreversible. A block is just a batch of newly processed transactions. Each block is connected to the previous batch or block of transactions by a one-way cryptographic function, forming a chain. Blockchains are write-only ledgers. Meaning, you can only add information to them. You cannot edit or erase it once written. It is as if all the transactions are piled beneath the weight of the other blocks. Third, it is on a distributed ledger. Instead of your bitcoins locked in a centralized database, vulnerable to a single point of failure, it is distributed among many separate parties' locked databases. The computers that verify blockchain transactions are called nodes. Before approving a transaction, the majority of the nodes must agree that the record of transactions is accurate. All of this is automated. So no one clicks agree every 10 minutes when a new block is made. If a person hacks the blockchain, they would need more the acquisition and coordination of resources of all the Bitcoin blockchain nodes globally. It is too expensive and hard to coordinate. And lastly, number 8. Bitcoin is easier to use digitally. With industries, governments, and cities becoming automated, it is way faster and easier to perform transactions with digital currency rather than with paper money. If you are interested in investing in digital currency, know what kind of investor you are, and see if it fits directly in your overall long-term strategic approach. Financial planners highly recommend only investing in a crypto asset that you could afford to lose.
Massive thanks for listening to this episode. And thank you for sticking till the end. Please do share, like, and subscribe to support our channel. This is The Traveling Thief, and we'll see you in our next episode.